Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, into the action we go today on this Wednesday, November 5th, 2014. Markets are up across the board. S&P and Dow up about 0.5%. NASDAQ is lagging just up 0.1%. And if you look at a lot of the NASDAQ stocks today, you know, the Teslas of the world and stocks like that, a lot of those are down and dragging on the market. So again, we're not seeing a great push on technology, but we are seeing a good push in the Dow and the S&P. And one of the reasons why the S&P is performing well today is because oil is bouncing. And again, oil is obviously a big component because there's a lot of oil services and drillers in the S&P 500, like Chevron, which is up $1.27 right now, Exxon up $1.11. So again, if we bring up the USO, take a look. So the USO opened slightly higher today and then just ripped higher. Now there was a kind of a concern out of Saudi Arabia with a potential explosion there. It turned out not to be a terrorist action, which would have really driven up the price of oil if that would have been started there. But bottom line is, either way, oil is still up about 1.5% today on the USO. That is a nice bounce considering the bottom that was potentially put in. Now, I talked to members in the research center last night on the daily chart of the USO, and I said, guys, bottoming tail on this chart. That is a buy signal. This should bounce. And sure enough, today, oil bouncing. So just by reading a simple chart pattern like that, oversold oil play, we are getting a bounce in oil, and again, a very simple read on that chart. Going back to the SPY, again, we're continuing to have days where you're putting in these little tails on the market. You're selling off early like yesterday and then rallying back. Today, a gap up, sell off, and then kind of rallying back. The question is, do we take out this pivot high from Friday? Check that from Monday. This is Monday. So Monday we had that high and then a little bit of a pullback. Tuesday the pullback continued. We bounced back. Today we gapped above that high, but notice how we quickly sold back below. Now we floated back just shy of that. Can this market go higher and close above Monday's high? If it does, that's bullish going into tomorrow. If not, you could be in for a little bit of weakness in the markets. Now, one thing this afternoon to watch for is President Obama will be speaking, and I believe his counterparts in the Senate and House will be speaking as well. And markets want to hear conciliatory content here. They want to hear things about compromise. All right, because now you have the House and the Senate both controlled by the Republicans, while the Democrats obviously have the White House with the president. But the markets are very concerned here. All right, they like the idea that the Republicans won because, again, pro-business, maybe more positive business things will get through. But will the president bow to that pressure? And if the president is firmly against working with the Republicans, then the markets could be in for some selling. If he's more conciliatory, then look for the markets to pop up a little bit and continue to grind higher. So that's something to watch for. Also, I think the metal markets have to be noted here. We have gold significantly lower on the day. It's off its lows, but again, down almost 2%, and silver's really the one that's getting hammered, down 3.3%. That is an ugly sell-off on silver, folks. No doubt about that. That is an absolute hammering on silver today, and silver and gold have just been rocked here. I'm actually surprised we're seeing even more downside on silver over the last couple days. It looked like we were trying to put in a bottom, and today just slammed to the downside again. And what's amazing here is from this high here, 20.5, 20.60 on the SLV, to the low today of 1470. I mean, you're literally talking about a 30% drop just in a few months on the commodity silver. All right, that is a crash, guys. That is no doubt about it, a crash. And sure enough, we'll have to keep an eye on it. Now, the one thing I will point out is, all right, so gold is also taking a beating today, and it's taken a beating quite a bit. I mean, it was at 120 here, and now it's at 110, so that's a $10 drop, almost 10% just in about a week and a half. But the big thing that I'm seeing here that you guys should note is look at the GDX today. GDX gapped lower. Now, this is the gold miners. All right, so this is basically all the gold stocks out there that would be in this. And look at that. It's green today. So that's telling me there's a divergence developing between the price of gold and the miners. The miners are actually stronger. The miners are actually grinding higher today by just a fraction, but nonetheless, considering gold's price, that's actually a good little buy signal on some of the miners, in my opinion. All right, again, you can look at stocks like GOLD. Let's take a look where that's trading. I haven't seen this. Yeah, look at that, up $1.50 today. That's a big bounce. I mean, for a gold miner with gold price down sharply today to be up a 2.5% handle, that's pretty impressive. And then you have other ones that are still under some pressure, like AUY that's been crushed. ABX is just pennies lower. But again, interesting divergence there. And even on stocks like this, SLW, take a look at SLW today. Silver's getting crushed today, and Silver Wheaton here, this stock opened sharply lower and is bouncing higher, sharply higher too, 3.31%. So again, there's definitely a divergence developing here, which usually speaks to a short-term bottom. But again, I mean, you're in a crash scenario with gold and silver, so you have to kind of be a little careful on this. But it really is amazing at this point, I have to say. It is quite something. Okay. What else do we want to touch on? Oh, the oil drillers and obviously those plays. A couple of my favorites continue to be CRR, guys. CRR, take a look at this. Just down from $150+ to about $50. If this can close above the 20, it's breakout. So I said this to you guys the other day when it was above it. It didn't close above it, sold off. In the next few days, if this at any point closes above this 20 moving average, which currently sits around the 52 level, that is a major buy signal for the CRR. Also, another overbeaten down play is SDRL, up almost 5% on the day. Nice move on SDRL. This stock, again, just a couple months ago was trading at $38, $40, and is now basically at 2021 right now. So these are just technically oversold, and you just look for the snapback bounce. If you get it, you basically on this, you probably look for a move up to about $24. Take profits on the CRR if you get that break above the 20 on a closing basis. You're going to look for, really honestly, this thing short term, I would look for resistance at 58, but I do think it actually could get all the way up to here around the 75 level if you get a sustained multi-day bounce in oil. Oil's actually getting a little bit of a bounce higher here on the USO if we just jump to that chart here. Not at the highs of the day yet on the USO, but you are bouncing up just a little bit. So we will keep an eye on that to see if it affects the markets. Let's take a look at the SPY. SPY bouncing off the 20, minor pullback, but we're still please note the volume today, guys. Super light volume, 55 million. And again, that's even with the craziness from the election, the gap up, the pullback, and still very light volume here. And again, you're bouncing off the 20 MA, just back up. Okay, other than that, let me just see if there's anything else on the radar that's showing up. I did call a top in the IYT yesterday based on a trend line, and you're seeing this basically be flat to positive today, which continues to be in my zone for a top. The reason I called a top was very simple. Take this high, connect it to this high, and you get yesterday's highs. You get the gap up from today as well, and it's sold off from there. So as long as you hold on or below this line on a closing basis, look for downside as a potential there. IBB continues to be weak here, guys. I think this is interesting on IBB because markets are green today across the board. NASDAQ, Russell, Dow, and anything else. I mean, you got the S&P as well. They're all green on the day by varying amounts. But look at this IBB. It just hasn't been able to catch any sort of bid the last few days. Really, the last 4 days from Friday's gap up, it just fell right down. And again, I've been saying to you guys it's going here. I still believe this. I think by a week from Friday, or maybe even sooner, you could see this at around $80, $78 into the 20, into this little pivot high right there. So keep an eye on this, guys. Right now, down about $1.75 or so. And we will be watching it very closely. You can see it opened higher today and then just came right crashing down. And again, one heavy sell day in the markets and the weakness in the IBB, which is the biotech index. I mean, you can see this thing down $5 to $10 in one day to that target. I really do think that. All right, so that's interesting there, folks. I think that's where I'll leave you today, but let's just go back to the spiders and just kind of keep track here. And right now, the spiders, again, just up $1.08, 0.5%. I mean, it's not a big rally. It's just another small green day, but it's continuing to kind of grind against this double top here. Watch this at the end of the day, this double top right here. Can they get this market above on a closing basis today? If they do, that's positive in tomorrow. If they can't, especially if we sell off down towards the lows, that would be a negative. If they hold it here, I just kind of rate it as a neutral. We got the ADP private sector numbers today and non-event. Friday jobs report should be very interesting to look at for this market. Take care, guys.